Hello everyone, thanks for checking out my video. It's yet another all-time high for the US stock market. The S&P 500 and Nasdaq indexes hit record closing highs last Wednesday as various technology giants rallied. But on Friday, a hotter than expected jobs report saw the stock market retreated a little bit. It seems like the same script to me. Hit all-time high, have a small breather, and then go for another all-time high again. So does it mean we will see another rally this week? Well, we have two key events coming up, namely the FOMC meeting and the release of the latest CPI data. Let's discuss them in this video. As usual, do stay throughout to find out more. Last week was a winning week for all three major indexes despite a wobbly Friday. So what happened last Friday was that the non-farm payrolls increased by 272,000 in May, surpassed the estimate of 190,000. On top of this, wage growth rose at 4.1% pace, which is way too hot for the Federal Reserve. Okay, let's explain these numbers in layman terms. The uptick in jobs growth supports the case that the labour market remains strong and resilient, and the economy continues to hold up better than expected. In case you wonder, isn't a strong economy good for everyone? Well, strong job market and wage growth are interpreted by the market as a sticky source of inflation, and it gives Fed little reason to cut the existing interest rates. If interest rates continue to be sky high, it's not so good for companies in general, as the cost of borrowing is higher. But somehow we did not see a massive sell-off last Friday. It could be because investors chose to focus on the idea that the economy is strong enough to keep growing in this high interest rate environment. If I were to sum this portion up, all I can say is we are at the mercy of the market makers and big institutions. I mean, we are all looking at the same job report, but the big whales can interpret whichever way they want. They can spin the story or narrative to their liking and move the market. And us, as the retail investors, just have to follow the trend. Alright, come this week, we have a few market moving events. First up, let's talk about the FOMC meeting. The Federal Reserve will meet on 11 and 12 June, and Powell will have a press conference on the second day where he will share the Fed's decision on the interest rates. Adding on to that, the latest consumer price index report will come out on the same day, Wednesday, before the market opens. Some are saying it could potentially be a hot one after Friday's better than expected non-farm payrolls and wage growth, while the others are saying we could see a cooler headline figures with gasoline prices heading lower. As usual, for me, I'm not gonna predict anything. I will just let the numbers be released and watch how the market reacts. But one thing that is almost certain is that the Fed will quite likely announce a pause again and leave interest rates higher for longer. As this is sort of what the market has expected, therefore I think the market would be more interested to find out the trajectory of the interest rate for the second half of this year. Other potentially market moving events for the week include Apple's Worldwide Developers Conference from 10 to 14 June. There will be a special event at Apple Park on the first day. The event will likely cover their latest products such as Vision Pro and the upcoming iPhone 16, as well as their latest iOS, etc. On Monday, we will also see Nvidia implementing their 10-for-1 stock split. Investors can expect some volatility in the stock price as some buyers may take profits. In addition, given that the stock price is cheaper right now, there will likely be more options activities, which will then bring about more volatility. I am actually waiting for this split so that I can trade some options too. And finally, Tesla will hold their annual shareholder meeting on Thursday, 13 June. I think the highlight of this event is how Tesla shareholders will decide the fate of Elon Musk's compensation package, which is estimated to be worth as much as $56 billion. If Elon Musk gets this $56 billion pay package, he will be the most highly compensated chief executive in modern history. Again, expect high volatility in the stock price on that day. Let's now move over to the technical analysis section. The broader market is looking bullish since SPY broke out of this green dotted uptrend channel. To be honest with you, I thought we would have a bit of retracement last week to test that 50 moving average, but SPY didn't, as it bounced off the 524 support level and hit another record high. Come this week, the two events that I mentioned earlier will be crucial. If the market likes what Powell delivers in his press conference, and if CPI comes in favorably, I'm not kidding you, the sky is almost the limit for SPY. Well, it may not fly up like a rocket, but I think the next meaningful resistance level is at the 161.8 Fibonacci level, which you probably can't see on the chart. The level is around 545. Okay, but before that, there is a small resistance at where SPY is right now, which is around 536, where the 138.2 Fibonacci level sits. If we break above this level, I think we have a high chance to slowly grind towards 545. On the other hand, if the market doesn't like the CPI numbers and what Powell has to say, watch for 524 as a support level. SPY has been staying above this level since it broke above it on 15 May. To add on, this was used to be the previous all-time high set in March this year. At one point, this level acted as a resistance, but right now, it has become a support level. Therefore, as long as this level holds, bulls need not worry. But if this level gets breached, then I think we could head towards the 50 moving average at 517. If we were to get here this or next week, I wouldn't be surprised if the market makers bring it further down to where the green dotted channel line is, which is around 512. Okay, from the current level of 534 to 512, that's a 4% pullback, which is quite significant for S&P 500, and that could be one potential area to pick up some shares if you want. Not financial advice, of course. Let's now move over to Apple. Similar to SPY, I thought we would have a small breather last week, but Apple continued to push higher. Anyway, in my previous video, I also shared the bullish thesis, and that is a break above 196. In my opinion, Apple will likely grind towards all-time high at 199. And I would say this thesis is still intact as Apple is sitting at around 197 right now. But there's always a but. What could potentially reverse this bullish thesis would be the event that Apple is holding starting from Monday. We really don't know whatever Apple is going to showcase or update will excite investors or not. Just like last week, for me, I would stay out of trading or buying Apple at the moment due to the recent parabolic run. Just to also share, we had two such parabolic runs previously to the current level, and on both occasions, we saw a huge pullback. To add on, no matter how I see it, there are two potential bearish signals. First, there is this potential bearish head and shoulder pattern. Second, it looks like a triple top bearish pattern to me. Honestly, if either pattern plays out, I think Apple could head towards 170's range. It may not happen within a week, it may drag out for a few weeks, just like what it did previously. So do stay subscribed to follow my videos as I continue to provide weekly updates. All this being said, if Apple somehow manages to introduce some exciting products or updates, and if the stock wants to rally, there is only one level to watch for the upside, and that is none other than the recent all-time high of 199. If Apple can break above the level, what will likely happen is what I have previously mentioned. When the stock hit all-time high, sellers would usually dry up for a while, which means the stock price will continue to rise for a while as well, before sellers come in to take profits. Okay, moving over to Tesla. If I were to use one sentence to summarize the technical analysis for Tesla, it would be Tesla is either headed towards 200 or 150, and this could materialize this or next week. Just like what I have shared in my last video, the Bollinger Band is squeezing day by day, week by week, which is usually followed by a big movement. If you are an option trader, be very careful entering this week. Try not to make reckless moves before Tesla's shareholder meeting on the 13th of June. Because of the impending huge movement, I actually did a quick scalp on my option trade last Friday instead of holding it past the event. More on that in the options trading segment. Anyway, there is really nothing much to update on the technical analysis. Tesla has been consolidating in this very tight range between low 170s and low 180s since the start of May. That's more than one full month of consolidation. Any breakout of this consolidation zone will likely be massive. Therefore, for this week, watch this tight range carefully and watch that 50 moving average at 172 for the downside. If Tesla breaks below that level with solid volume, there is a high chance for us to hit minimally 161 and a decent chance of touching that gap between 142 to 157. On the other hand, if the breakout is towards the upside, then I am quite certain that Tesla will punch above that blue dotted downtrend line. A small resistance will come in at around 185, but if we were to see a huge movement, I think this 185 level is negligible because the stock will likely go towards the recent high of about 199. Okay, in my opinion, everything is setting up for Thursday event, and my view is that there is no need to guess the direction. Let the market makers choose the direction, let them go first, and we the retail investors follow behind. I mean, predicting the direction 1 or 2 days before a major event is almost equivalent to gambling, and that's not what I would advocate. Okay, let's now jump over to Google's chart. Last Friday, we saw a bearish engulfing candle forming, and coincidentally, Google is almost at the top of this green dotted uptrend channel. So if the bearish momentum continues into this week, I would expect Google to fall towards 167, where the next immediate support is. But as mentioned last week, as long as this 167 holds, we are good. But if Google falls below 167, then watch for the 50 moving average as a support. The level is 165. So in short, watch out for 165 to 167. If Google closes below this area, I think we can say hello to the gap area between 156 to 162. This is one key area that I will consider either picking up shares or selling cash secure put. Not financial advice. On the other hand, if Apple announces some form of partnership with Google or just somehow the market wants to push Google higher, bulls will want to see Google breaking over the green dotted uptrend channel line decisively. To highlight, Google tried doing that twice recently, but fell back into the channel quite immediately. Well, is third time's a charm? We shall see. A break above this green dotted channel line means we will see another all-time high. And that's obviously bullish, and I wouldn't want to hold on to any put options. In fact, Google's overall trend is actually quite bullish, so if you have bought put options recently, then something must be wrong. Let's now check out Meta. Meta is displaying bullish momentum as it broke above the mini consolidation zone and went above the resistance level of 483. This has put Meta into the earlier consolidation zone that ranges from 482 to around 512. This also means we could potentially see Meta grinding towards at least the 500 level. Further bullish momentum would bring Meta to the top end of the consolidation area at around 512. But this bullish thesis will only be valid if Meta can hold above the 483 level, which has turned from a resistance level to a support level. Coincidentally, this is roughly where the 50 moving average sits, at around 480. So yup, watch for 480 to 483 as a decent support. If it holds, then the bullish thesis could play out. But if this support zone doesn't hold, then I wouldn't want to be holding on to any bullish call options, because below 480, it means Meta is back to this consolidation zone, which then also means we have a chance to see Meta falling towards the bottom of this consolidation area at around low 450s. One last thing to highlight, Meta has gone above the upper Bollinger Band, so I think we can expect a bit of sideways or slight retracement for Meta early this week before the next direction. Okay, this is not financial advice, okay? Finally, let's check out Microsoft. What else I can say about Microsoft other than it's still trading within this very predictable range of 390 to 430. Imagine you have been selling put options or call options with strike prices outside of this range since January this year. you would have profited quite a fair bit. Anyway, Microsoft is approaching the top end of this consolidation range, so we can expect a bit of resistance coming in soon, unless of course there is a catalyst that pushes Microsoft above 430, then that will be a different story. Otherwise, if sellers step in again between 420 to 430 range, Microsoft may head towards 410 to 415, where the 50 and 100 moving averages are, and personally, I will be watching the 100 moving average closely. This level is 412. To highlight, Microsoft bounced off this level very recently, and if it gets tested again and doesn't hold, then I think there is a chance for Microsoft to hit either 405 or the gap area at around 399 to 401. Either level will get me excited, as I will look for opportunity to pick up some shares or to sell cash secure put. Moving over to the options trading section, the first trade to update is this covered call on Tesla, which expired last Friday, 7 June. The contract was sold on 29 April with a strike price of $200. This trade was an easy decision to make. Why so? First of all, if you have been following me, you would have known that I previously got assigned with 100 Tesla shares at $200 per share. Therefore, by selling this covered call, it means that on expiration date, if Tesla closes above $200, this 100 shares will get caught away at the same price that I have been assigned with, which is $200 per share. So that's fine for me. But if the stock price doesn't close above $200 on the expiration date, which was what happened last Friday, my contract will expire worthless, and I get to keep both the shares and the juicy premium of $900 without having to close my position. Furthermore, on the very same day that I sold this cover call, Tesla popped 15%. I have shared a lot of times that such overreaction from the market is not sustainable, and that was what happened as Tesla fell from 190s range to 180s and 170s range. It has since been consolidating at this 170s to 180s range for more than a month, which is good for option sellers like me. Anyway, this $900 premium is the highest amount that I have received for a single contract that I have sold. I am definitely happy to take this money anytime. Okay, well, since I have that cover call expired, on the very same day I sold a new cover call with the same strike price of $200 expiring 19 July. By doing so, I received a premium of $515. When opening this position, I was very much aware of two risks. First of all, as mentioned in the technical analysis segment, the Bollinger Band is getting very tight and a huge movement is almost imminent. This movement can be either direction. In other words, it could go against me. So that's risk number one. The second risk is the big day for Elon Musk on 13 June, where shareholders will vote on his massive $56 billion compensation package. I think we can expect some extreme volatility and probably a big movement in the stock price on that day. Once again, it's not possible for me to guess the direction. It's really a 50-50 call, which means the stock price could go against me. So that's risk number two. So in view of the risk, I decided to place an order to close my position on the very same day before I went to bed. And when I woke up the next day morning, I saw that my order was filled. To summarize, I sold the call contract for a $515 premium and bought it back at $460, which gives me a net profit of $55. Not a lot, but enough for me to cover a good meal at a small restaurant. Meanwhile, just to share, the profit that I have made from options wheels trading so far this year have hit the amount that I have earned for the entire of last year. I am sorry that I am not disclosing this amount at the moment. But if you have tracked every single trade that I have shared in my weekly videos, you will roughly know how much I have profited from trading the wheel strategy. Okay, but just a quick disclaimer, it's not really a lot as compared to many other pro option traders out there. Anyway, the reason why I am sharing this is because I want to let viewers know that options trading can be a decent way of generating additional income, despite the risk that it possesses. I believe risk can be managed and reduced if done properly. And to me, options trading really opens a brand new world for me. So if you don't know anything about options and if you have the time, try picking up these useful skills. I do have some videos on the basics of options trading and options wheel strategy. Do check them out. At the end of the day, it may not give you life-changing wealth, but it is a useful tool to get additional income every month. By the way, talking about additional income, I have finally met the minimum payment for YouTube to give me my first paycheck. Congratulations to myself. But somehow my Google AdSense hasn't been updated yet. Well, I guess I still have to wait a little while more before I can get my first ever paycheck from YouTube. Again, like I always said, this YouTube income is not going to make me rich. I am really doing all this just for passion. But it still feels nice to achieve this little milestone. So do keep the support coming in. There are so many ways to support this channel, such as buying me a YouTube super thanks or a cup of coffee via my Ko-Fi link. Or you can choose not to spend a single cent by tapping on the like and subscribe buttons, as well as comment something below. And oh, if you found my content useful, do share it with your friends as well. Okay, as usual, sharing some of my thoughts here. Going back to the earlier hotter than expected job report, I just wanted to say, though a strong labour market could mean the Fed is in no hurry to cut interest rates, the latest job data also offers another perspective. That is, there are no signs of any cracks in the labour market. This is actually positive for companies and the broader economy, provided inflation does not surge again. I think we are in a balanced situation where the labour market is a little hot but not too hot to bring inflation back up, while at the same time the economy continues to be resilient as companies' profits continue to grow. I mean, investors should all be happy that we have got a strong economy, because at the end of the day it's all about the economy. The last thing we want to see is a recession, high unemployment rate, high inflation all coming together. And like I have mentioned in my past videos, it seems like the economy and companies are adapting quite well in this high interest rate environment after being in such environment for, I don't know, the last 1.5 years. On a separate note, with two key events happening on Wednesday, to be honest, I will try to avoid making any big move before Powell delivers his speech. Because first, it's hard to predict what will come out of Powell's mouth. And second, CPI day has always been quite volatile. And third, we wouldn't know how the market will interpret Powell's speech and the CPI data, just like how the market can interpret the jobs data differently last week. And I do urge short-term traders to stay a little cautious before Wednesday. Okay, with that we have come to the end of this video. Do help to like and subscribe, and also share this video with your friends to help me reach out to more people, alright? Thank you very much.